What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol NFLX for Netflix Inc., of course. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this is a stock that we watch fairly closely here and on the main channel. You can certainly see that we are getting a little bit of price action lift here into the overhead gap from the prior earnings cycle. We came into the half gap target, and today we did resist a little bit off of that level. Of course, with the earnings announcement from Facebook in the post market, not many of the tech companies are doing well. That is no exception here inside of Netflix. If I just pop on the extended hour session, you can clearly see there's been a little bit of a downward slump here. It's not like a huge dramatic gap like what we had in Facebook, of course, because of their earnings, but it is a gap nonetheless. So we do want to know where the overnight low is and, of course, where today's low is, so we know when and if the gap does ultimately fill. And do keep in mind a lot can happen between now and 9:30 when the bell actually does ring, so please adjust accordingly. I'm going to turn that back off to eliminate some distractions. We'll focus on the 30-minute time frame here, and what we'll talk about are the potential scenarios, right? So we are anticipated to be opening around these lows. Firstly, we would expect the gap to fill, right? And if that happens, it becomes all about today's lows, which are an H pattern, right? So we get touch 1, touch 2, obviously opening up, below that does present a bearish opportunity for a gap fill reversal and then more of a downtrend to resume. And that would be completely okay in my estimation, given the fact that Netflix has been on a fairly substantial run here. As long as we just get consolidation above the gap down high from earnings, I would say things are fine inside of Netflix for a bull flag to consolidate and potentially the remainder of the gap to fill into the future here. That trigger point, of course, would be up and over the highs around 450, 410. The gap completely fills from earnings, of course, not today's gap down, but the earnings gap up around 507.40. So that's what I'm seeing from that perspective. If I just scrunch up the chart a little bit and talk about trend, right, we clearly have lows, higher lows, higher lows, higher lows, and they're continuing to build. Again, as long as we're above 410 roughly, things are fine here inside of Netflix for that consolidation and then eventually a breakout higher. If we were to break down underneath 410, that does start to change the tone, and I would watch for this gap underneath us to potentially fill over time. Notice that there's not a whole lot of market structure as we were making that move higher there, so I feel as though it would be retraced fairly quickly instead of offering a ton of support, right? So that gap technically fills all the way down towards this 384.81, and it's underneath, of course, the low from the Monday session around 398.42. So we'll see what happens. I do imagine that if we get down here, Bill Ackman and his fund with now 31 million shares of Netflix becomes active and may start to pick up some more at that quote-unquote deep discount. So that's what I've got for you inside of Netflix. As of right now, it's all about the gap and whether or not we gap and reverse off of it for the gap fill reversal, or if we accept inside, I would just expect some chop in here. Sure, you can take day trade scalps, but anything in terms of direction has to be produced up and over and into the remainder of the earnings gap from in there. That's going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.